Welcome to this weekend's edition within the Silver Log and Silver Analysis. And what a wild 2 days for the markets on Thursday and Friday, down a little over 13% on Friday, which was previously down 9.5% on Thursday. So, very much massive size moves. It is below this lower band. The lower band is currently at 32 and a quarter, so it's retraced negative 8.7%. It's not too often that you even, let alone touch these things, but even stretch them further, in this case towards the downside. But when you have the banker intervention and all of the big moves that they want to do, they could not care a less about a lot of these different support and resistance sort of levels. If they want to keep on going and work within their agenda, whatever it happens to be, that's exactly what's going to happen. Can we have further downside on Monday and Tuesday? I could say it's possible, but right now I'd be looking for this previous level of support to become that of resistance before we do manage to go lower. I'm going to now switch this up to the 6-hour time frame, and we see it falling off of a cliff, basically. It's down 16.9% of a retracement to the negative part within the lower band, and the lower band is 32.5 in this situation. It first managed to go down to this band in here, so it was below it for one turn, 2 turns, it got above it for this one, and then 3 consecutive periods, or 5 of the last 6, it's been lower than this line, and this line is just going to keep going lower like this until, of course, something can happen to stabilize this market. But the overall move from here to here, which pretty much spanned 48 hours, is something that you normally see a lot of times in multiple different months. For the move of 42 to 30, that's a loss of over 10 major changes. The move translated to be 36.95%. This is calculated by taking the highest level, subtracting the lowest level, and then dividing it again by the lowest level. Within this 48-hour period from the time Ben Bernanke spoke until roughly 2 o'clock on the afternoon on Friday, it was a difference of 36.95%. The years above are all of the years that had less volatility throughout the entire 12-month, 250 days or so from the lowest and highest point, which really does say quite a bit. Now, as far as downside targets are concerned, I got 2 which are pretty much the same levels. We'll first use it within the quarter day chart. The Fibonacci formulation is normally high divided by low to the power of 1.618. That's the upside level. And then again, you multiply it by the low. Now, for the downside, I have to do the exact opposite. So instead of taking the high divided by the low, I take 1 divided by the low divided by 1 divided by the high. Put that one to the power of 1.618, multiply 1 divided by the high again, and then make sure this is 1 over everything, as we can see here. And the formula gives us a number of 26 and 2/3 as a significant support level. The next one that I'll show you has the exact same, for the most part, the exact same thing. Now, as far as the Fibonacci from this low to this high, I've talked a lot about it. The key levels were 38 and 42, and they're going to be changing as we move forward. We did not get a confirmation break above 42. What you need to see happen for this is to get above it like we did here, and then find a way of finding support. Now in here, I thought this was totally fine, and it was, because it was a higher low over here. Then you come in here. This was a lower high, which created a symmetrical triangle, followed by another lower high, and then there's a downtrend, which proceeded more towards the downside. So we never had a confirmed move to the upside. Thus, the rally that started on the 30th of June as of now becomes a failure. Oftentimes from failed moves can create fast moves, and that'll be better shown on the next chart, which is a daily chart. And within this one, we have this orange line, which is the 50-day moving average. And what I was saying is that we are guaranteed to have a failed move. And usually you get a fast move. Either the failed move was breaking below here and not starting a bear market, because you go below the 50-day moving average, you're finding it as resistance, and if you're going to change a trend, then eventually you're going to start going lower. That didn't happen. It went above it. So now the question was, is this going to be the failed breakdown or the failed breakout? Right now, it's looking as if this may be that of a failed breakout. And this is almost playing exactly as I perceived back at the start of the year this year. That was to have a bounce up to around $50 an ounce, sell off pretty hard, but stay bullish, of course, is what I meant to say, and then go sideways for quite some time, have an original break to the upside that fails, which would be followed by a fast break to the downside, making new lows that would ultimately fail before the thing just really starts to skyrocket towards the upside, which has so far been fairly close. But as far as this Fibonacci level of 33.58, this is from the breakout on August the 24th of the lows of $17.74 and the highs in here at $49.81. The first level is 33.58. Two successful tests of this level, was not able to pretty much find support here where it needed to and then go higher. So this level did not hold as support. The next level is 26.32. That's a major Fibonacci level, and it also matches the area here, which was exactly 26.30 of the previous low from late January, but that would be the area I would be expecting this to go, because when you have confirmation, and we haven't got confirmation yet though, but when we have confirmation that this area is not going to be support and it's going to have further downside, I'd be expecting this level to be touched. But because of the longer term charts in that of a bullish trend still, all of the sell-offs that do occur are planned to be guilty until proven innocent because of the uptrend on the multiple time frames. We do have this lower high in here, and we have now created one lower low. So there is possible reasons for things to be changing up within this time frame. However, if we do some trend line analyses, we can draw a trend line within here, which is obviously not that near right now. But if we go down to 26, then it's obviously going to touch that area. Now, as far as this resistance trend line, that was resistance in here, support. It can still be support in here, but it really has to get going over the next couple of months. Alrighty. There's some more images or all time frames located within the blog. The quarter day, daily, weekly, monthly, 3-day, half year, all that type of stuff is on there. Thank you for tuning in and have yourself a magnificent weekend, and bye-bye.